While 75% of real estate investors get rejected for traditional mortgages, DSCR loans have a 60% higher approval rate with no income verification required. For investors serious about building their portfolio, this could be the game changer you've been searching for. How exactly do you get a DSCR loan and use it to grow your real estate empire? Let's break it down. What is a DSCR loan and why should real estate investors care? DSCR stands for Debt Service Coverage Ratio. Unlike conventional loans that focus on your personal income, DSCR loans qualify you based on the property's income potential. The lender calculates whether the property generates enough rental income to cover the mortgage payments and expenses. This is revolutionary for investors because your personal income becomes irrelevant. Have inconsistent income? Self-employed with complex tax returns? None of that matters with a DSCR loan, as long as the property can sustain itself financially. How do you determine if you qualify for a DSCR loan? Start by calculating your property's DSCR ratio. Take the annual rental income and divide it by the annual debt obligations. Lenders typically want to see a ratio of 1.25 or higher, meaning the property generates 25% more income than needed for expenses. For example, if your property generates $2,000.00 monthly in rent, that's $24.00 annually. If your annual mortgage payments, taxes, insurance, and HOA fees total $19.20, your DSCR is 1.25. Meeting the minimum threshold most lenders require. What documentation do you need to apply for a DSCR loan? Unlike the mountain of paperwork for conventional loans, DSCR loans require significantly less documentation. You'll need property details and purchase agreement, proof of down payment funds, rent roll or market rent analysis, property insurance information, credit report, most lenders require 640 plus score, entity documentation if purchasing under an LLC, licensed land service, no tax returns, W-2S or employment verification needed, which streamlines the entire process. How much down payment should you prepare for? Most DSCR lenders require 20-25% down payment, slightly higher than some conventional options. However, this larger down payment often results in better interest rates and strengthens your application. For a $300,000 0 property, prepare to have 60 0 cents, $75, 0 cents ready for the down payment plus closing costs, typically ranging from 2 to 5% of the loan amount. How can you improve your chances of DSCR loan approval? First, focus on properties with strong rental income potential in stable markets. Second, maintain a credit score above 680 for the best rates. Third, have reserves equal to 6 to 12 months of mortgage payments. Fourth, consider working with mortgage brokers who specialize in investor loans rather than traditional banks. Many investors also create a property analysis package showing comparable rents, occupancy rates, and projected cash flow to strengthen their application. What are the typical terms for DSCR loans? DSCR loans typically offer 30-year terms with fixed rates for the first 5-10 years. Interest rates run about 1-2% higher than conventional mortgages, but the flexibility and qualification process often outweigh this cost. Many lenders also offer options for interest-only periods, which can maximize cash flow during the initial investment phase. Because understanding loan requirements is essential for successful applications, the next video reveals the exact DSCR loan requirements that lenders don't openly advertise, but that can instantly increase your approval odds and potentially save you thousands in interest costs.